I think the reason the H20 news was a surprise over the past couple of days is because the trend of US policy had certainly been to trying to restrict access to China's AI ecosystem and to limit the ability of Chinese firms like DeepSeek or like ByteDance to buy the most advanced chips. And so that's why this reversal from the Trump administration did take most people by surprise. I think you're also right to say that the key question in the long run is not what is the U.S. willing to sell to China, but what's China capable of producing domestically on its own. I think there's not much doubt that if Huawei, which is the leading producer of AI chips in China, could produce enough chips at a high enough level of quality, Chinese firms would buy largely, if not exclusively, from Huawei. The problem right now is that they can't produce at the scale that's needed. They're producing medium volumes of AI chips, but China's largest firms want to buy large volumes. So that's why they've turned to Nvidia. Right now, it doesn't seem like China's leading chip makers, SMIC, which produces GPU chips for Huawei, are going to be able to ramp up their production capacity fast enough to meet China's own internal demand. Not this year, probably not next year, even by 2027, it's pretty unclear. And so long as that's the case, so long as China can't be self-sufficient, it's going to need to rely on importing AI chips. And right now that means importing AI chips that are manufactured in Taiwan and designed by US firms like Nvidia or AMD.
Do you see the chance of a upside surprise coming out of China? I mean, maybe the DeepSeek moment for semiconductors in China. I say that just because a lot of the memory industry watchers have said, China has years, if not like a decade, to catch up with some of the players in South Korea and so on. And here we are, we're talking about Samsung's and SK Hynix is saying that they are suffering, or they're struggling because of the legacy memory chip competition coming out of China already in 2024. So maybe we're going to get there with China, with some of the AI chips as well. Huawei in the run.
Well, I think we already see when it comes to legacy chips, both memory and processors, Chinese firms having a big impact on the market, winning market share both in China, but also globally, and also putting pressure on prices. That's exactly what companies like Samsung and Hynix are referencing in the memory sector. That's already happening, and it's going to keep happening. And the impact will be larger, I think, over the next couple of years. In terms of a surprise, in terms of China jumping ahead in capabilities, it's always possible to be surprised. But I think when you listen to the Chinese ecosystem, when you listen to the Taiwanese ecosystem, which has great visibility into capabilities in China, what you find is that when it comes to advanced chip manufacturing, there's still a lot of reliance on the international supply chain, which means Dutch and Japanese and US and Taiwanese capabilities. And it's hard to leap ahead in a supply chain that's just so complicated. If it had been easy, China probably would have already done that leap ahead. And so that's why I think you've got China focused on this question of, can it keep getting access to these advanced chips that are made in Taiwan, because they're so critical to China's technology ecosystem. Another way to look at the question is China's been targeting rhetorically as well as in terms of its spending self-sufficiency in semiconductors for a decade, but its imports of chips have been trending upwards because it's been unable to produce enough chips at the cutting edge for phones, for PCs, or for AI. So there's already been a real drive towards self-sufficiency, but it's not an easy thing to accomplish. Much easier said than actually done.
Since Nvidia has been in flames for the majority of the last 2 years, you may be wondering if and when you should join. On August 27th, Nvidia has another possible catalyst in store. Before then, should you purchase the stock? Let's investigate. Let's begin by reviewing Nvidia's history to date. Although the company has been in business for almost 30 years, the AI boom has caused it to develop significantly in recent years. Early on, Nvidia saw the potential of AI and made the decision to expressly develop its graphics processing units, GPUs, to satisfy the demands of this expanding market. For the business, this turned out to be a game changer. Nvidia has established a good name in the industry and seen sales surge in the double and triple digits as a result of its early and forceful entry into AI. Demand has even surpassed supply as a result of customers naturally turning to Nvidia when they require the most potent and effective chips to power their projects. Nvidia's yearly revenue increased from roughly $27 billion 2 years ago to over $130 billion in the most recent fiscal year, thanks to this. As Nvidia maintains high profitability on sales of its chips and related products, Net income has also increased, hitting record highs. Another wise move Nvidia has made in recent years is to diversify into a wide range of AI services and products, positioning itself as the go-to source for anything a customer would require. This also includes the tools required for the AI of the future, so Nvidia's financial dominance should last for many years. For instance, Nvidia is in a strong position to play a significant role as agentic AI gains traction, and if humanoid robots develop into a lucrative field in the future because it drives so many AI activities. Another wise move Nvidia has made in recent years is to diversify into a wide range of AI services and products, positioning itself as the go-to source for anything a customer would require. This also includes the tools required for the AI of the future, so Nvidia's financial dominance should last for many years. For instance, Nvidia is in a strong position to play a significant role as agentic AI gains traction, and if humanoid robots develop into a lucrative field in the future because it drives so many AI activities. It's also crucial to remember that Nvidia recently got some very positive news. The business will soon be able to sell its GPUs to China after briefly being shut out of the Chinese market by U.S. export restrictions. Nvidia was given assurances by the United States that it would be granted the necessary license to do so. China is a significant market for the company, accounting for 13% of revenue last year. Any information on developments in that region could boost the stock. Nvidia boss Jensen Huang may offer investors an insight into the rollout of Blackwell Ultra, the company's next technology. CoreWeave, a cloud computing platform for artificial intelligence, recently announced that Ultra is now accessible to clients. Huang's remarks may have an effect on stock performance because he is renowned for giving earnings calls that are packed with information and elements that provide insight into the future. Of all, Nvidia stock already has surged in the double digits this year, and any general economic or import tariff headwinds could represent dangers to performance. Therefore, purchasing stock now and expecting short-term gains is never a smart decision. It would be wiser to think about that player's long-term potential instead. Your chances of winning are significantly increased by this. You are likely to post a bigger win than if you buy and sell over a period of a couple of months. This means you don't have to buy Nvidia stock before the company's earnings report, even if I think it's a good investment right now. Over time, the stock could greatly increase the value of your portfolio if you invest before or after that time. So what implications does this have for Nvidia's stock? Let's explore that. But first, a big thank you to those of you who've stuck with us this far. Creating these videos takes significant effort and dedication, so if you're enjoying the content, please hit the like button, subscribe to our channel, and share your thoughts on Nvidia stock in the comments. Your support truly helps us grow. Now let's get back to the video. Nvidia and advanced micro devices appear to stand to gain the most from the recent unexpected turn in the US-China trade war. Following reports that the United States is planning to relax its restrictions on chip exports, which could enable the companies to resume selling their artificial intelligence, AI chips to China, both stocks surged. The two businesses had just been shut out of China, a sizable market. China will now be able to purchase Nvidia's H20 graphics processing units, GPUs, which were made especially to adhere to previous export regulations. After new regulations forced the corporation to seek for a license, sales were suspended in April, jeopardizing billions of dollars in income. However, Nvidia stated that it has received assurances from the U.S. government that licenses would be issued and that shipments may soon restart. This marks a major policy reversal and signals that the Trump administration is softening its stance. The fact that this comes after President Donald Trump and Nvidia CEO Jensen Huang met recently is no accident. Nvidia was concerned that cutting off China entirely would jeopardize the company's position as the world's leading AI company, despite its explicit support for American job creation and desire to keep AI innovations centered in the United States. Additionally, it was expected to lose $5.5 billion in revenue due to its H20 chips. AMD was also in the headlines, stating that it anticipates starting to supply its MI308 AI chips again after the Commerce Department starts reviewing licenses again. AMD had warned that the restriction could cost them up to $800 million in lost revenue. The change was made only weeks after Beijing and Washington decided to relax export controls on rare earth elements and move toward a more comprehensive framework for tech trade. Nvidia wasn't content to sit idle, even if bringing the H20 back to China should increase sales by billions. It was already working on the RTX Pro, a new fully compliant GPU designed for smart factories and industrial automation. This might open up another potential avenue for the corporation. The Nvidia story is still about much more than China, even though the China news is a short-term stimulus. Nvidia holds a commanding 92% of the GPU market in Q1, making it the industry leader. Although the company's CPUs are among the most potent available, its CUDA software framework is its true strength. The platform was developed by Nvidia to broaden the use of GPUs outside of gaming. While other markets took time to develop, the company pushed the platform into research labs and academic institutions, where early AI efforts were being conducted. As a result, CUDA became the software platform that taught developers how to program GPUs. Libraries, frameworks, and tools were then developed on top of CUDA with the express purpose of improving the performance of its chips for use in artificial intelligence. With China reopening, Nvidia's stock became even more appealing, as the company continues to pioneer AI. Therefore, even with its recent surge, I believe it's still time to purchase Nvidia stock. AMD will probably never surpass its GPU opponent, and it is not Nvidia. Although its revenue from AI is much lower than Nvidia's, the company might still rise significantly if it can generate even minor share increases. Don't forget to share your thoughts and experiences in the comments below. Your input helps create a more knowledgeable community where we can all learn and grow together in the world of investing. Stay up to date with the latest market trends, insights, and key updates by subscribing to Investing Tutorial. We're here to help you make smarter investment decisions and stay ahead of the curve.